I'm honestly upset. I'm annoyed that nobody told me earlier in my trading journey what I'm about to tell you. And it makes so much sense to me now why some people lose money in trading while others profit. It all comes down to the idea I call 2 to 24%. I'm going to show you how you can implement it in any trading strategy or trading robot you use. It became absolutely clear after our last team building event with the Algo trading space team when we had a conversation with Sam, one of the most experienced traders we have. I asked him how he manages to stay so patient and pass prop firm challenges in 8 to 10 months. And what he said was amazing. Stay with me, guys, give me just 10 minutes of your time and you will be amazed by what we discovered. And many people think of Petko as the guy who shows on YouTube and talks about trading with robots, but there's a whole company I've built step by step, a team of professionals I've gathered from around the world. It's a lot of work that we can't always show in videos, but that work leads to many profitable accounts. And that's why I decided to start this series behind Algo trading space, because if you just understand the flow and the idea of 2 to 24%, you can turn your accounts into profitable ones. Right now we're having a meeting with my team about the backtesting, and they don't know I'm recording, and particularly we are looking at some of the EAs from Pavel, the popular MQL vendor, and what we found out is quite interesting. The vendor is focusing on the fast way and the multi-way, because just the northern way blew his account in the past. And even now on the website, he's just showing kind of selling the fast way and the multi-way. But what your calculator showed, if I just mark the EA so we can see.
I backtested here with very low risk settings.
Yeah, but you can see that even on a very skeptical or low risk trading 5k account with just 0.03, 0.07, you can see that we still make above 2% with 1, 2, 3, 4, 5 currency pairs. That's huge. Can you tell me what was the reason you backtest on the Darwin X data?
I've probably been preferring Darwin X data for quite a while now. Probably historically comes from the fact that I've been running MT4 for a long time, and with that I ran Tick Data Suite, and that's one of the more reliable kind of best kept data in Tick Data Suite, and that seems to have transposed over to MT5. So sometimes when backtesting with different brokers, sometimes when you run the backtest, there can be tick data missing. When you check the quality, it's often less than, ideally 99%. But I've always found that Darwin X, even for many years back, is 99% high quality.
Right, so probably what I will do is I will put those in a live account or in a Darwin X account, because I think there is value in these EAs, and just the calculator shows that in a 5k or even it's a 10k, we can make more than 2% with relatively low risk. 3 important things for backtesting. Number 1, we look at the profits it made in the past and the worst drawdowns that happened. Number 2, we use the backtest to evaluate what risk we should take, or in other words, how much to trade with. And this is where the idea of 2 to 24% comes in, which I'll share with you in a minute. Number 3, based on the backtest, we know how to manage the EAs once we start live trading. And this is where Sam punched me in the face while we were recording another video together.
With all my accounts, I always make sure that when I trade it, I don't want the consecutive losses in the real account to exceed the backtest.
And now we're having this meeting for an hour, and probably it will last for another 2-3 hours, but it's so important for me and the team. Because people start trading without asking themselves the important questions. Just ask yourself, What risk will I take? How much will I make with that strategy? How long will it take to make real money out of it? Because you really don't make money until you withdraw your initial investment and $1 on top of that. And it makes so much sense because quite often we start live trading and set some rules like a max loss of 30% or 50%, but we forget that we decided to trade this EA or this robot based on the backtest results in the first place, right? This was the mistake with the sharpshooter EA. The backtest showed a 4% drawdown, but I set it to 30% based on a recommendation from Ryan. And it happened. If I had kept it at 4%, just like the backtest showed, I would have recovered the loss within the first month. Let's try this together in the comment section. When you sit on the computer, make a backtest on the robot you trade and let me know what the max drawdown you see is. Is that how much you're actually risking in your live account? Tell me honestly. But here is the kicker, guys. The backtest gives us the rules for the risk. And if you combine that with the idea of 2 to 24%, it's just perfect. Let me show you what I mean. In many videos I've shared that 2% per month is my new target with any of the EAs, and many of you have been wondering why so low when many EAs can make more. First, it's not low because 2% per month is 24% per year, and that's a lot. It's more than what the S&P 500 makes on average, and the compounding effect will grow your account steadily over time. For example, if it's 25% on a $10,000 account, next year it will be 25% on 12,500 or so. And if you keep such a steady growth for 20 years, you will have over 1 million because of the compounding effect. Second, my team and I have found that 2% is a realistic long-term performance for most EAs out there. And if we want to maintain a balanced portfolio like the one we have now, we need to set realistic expectations and targets for all of the EAs. So 2% per month or about 24% per year is pretty much the golden middle for most EAs. What's very important for me is that now, after realizing that 2% per month is more than enough, after learning how to use backtesting properly and how to decide which accounts to trade all the EAs on, I feel so relaxed. I know exactly what the team should be doing. Even when I'm working out or training, I'm not worried about any of the accounts because we have realistic expectations and targets. The risk is properly set and there is nothing that bothers me. And that's very important when you're trading, trust me. That doesn't mean we won't fail with some of the accounts, right? I failed with many EAs. That's the price I've paid to find the profitable ones. Recently I watched a video from Jeff Bezos where he said the following.
What really matters is companies that don't continue to experiment, companies that don't embrace failure, they eventually get in a desperate position.
Honestly, I'm happy when the account fails because it teaches me something I couldn't learn anywhere else. It's priceless. It's the knowledge that I have and others don't, and I know how to use it to make things work. So remember, if you fail, if you lose, stand up, learn from it, and keep pushing forward. That's all we need to do.